Hi everyone. Welcome to the TimingResearch.com crowd forecast news for June 5th, 2023. We are recording this at 1 p.m. Eastern Time, and this is episode number 388. Today I have arranged for Michael Filighera to join us again, and the option professor is here to moderate, so I'm going to go ahead and turn it over to him.
Okay, thank you very much, David, and welcome everybody to this Monday morning. I think we might be on the precipice here of a very, very exciting time because we've got the S&P up into this 4,300 area, which Michael, I think, will discuss hopefully with us a little bit of a Fibonacci number there. And we've got the VIX on my end of the screen that hit 14 last week, which is certainly a very low number. And we've got interest rates considerably going up. So as far as yields, I just looked at the yields on what you can get on corporate bonds, A-rated. And so the interest can be anywhere between 6 and 8% on your money. And we'll have to see if how things work out from here. But this could be a very big week as far as some of these things are concerned. Michael Filighera is with us. He's going to help us with a lot of technical stuff. He's very expert in the Elliott wave as well as Fibonacci numbers, which is exactly what we'd want to talk about here today. And Michael, introduce yourself a little bit, please.
Sure. Good morning, good afternoon to all. My name is Michael Filighera. I am the proprietor, owner, trader, analyst with TradersHelpingTraders.com and also LogicalSignals.com. Currently, I am also on YouTube where I produce a once-a-week big picture update, and that's covering all of the equity index, not all of them, the S&P, the NASDAQ, the bond market, the gold and silver, and the dollar index. And those I go over on a big picture basis. I'm now shifting that to where I'm keeping it technical. So I'm not really I'm separating, speaking more fundamentally and what's going on in the news and just keeping it technical. So they're a little bit shorter. And then I try to put in one that is going to cover all the bases. But then I daily do an Elliott wave update, and that's just on the ES and the NQ.
Great. Okay, well, let's get into things here. First of all, it's Monday morning, so we generally go with that question of where do you think the market might end on Friday, using the opening here as a basis. So the opening today was what? On your screen there, it looks like 42.82.
4282.37.
Okay, so by Friday, which is a long way from here, what do you think it'll be? Up, down, sideways?
Again, a touch call, but on this particular one, I'm going to surprise you and say higher.
Yeah, because there's still momentum. You can't stand in front of it.
Yeah, that's true.
With regards to anything technical or fundamental you're looking at that might tell you that might be the case?
Technically, like you said, there's a great deal of momentum right now. And it almost becomes selective. The last couple of weeks, it was NVIDIA, and then anything AI. It remains AI is the hot ticket right now. But right as we speak, Apple came in today, which started last week, started showing its hand that its intent was to go to new all-time highs, which it now has successfully done in one big fell sweep right through that 182 level and now heading up towards 185. Bearing that in mind, what also is now out there fundamentally is the narrative and the talk that the Fed's going to pivot, the Fed's going to pause, the Fed's going to pivot. You know, we keep bouncing back and forth on that. We're continuing to see, what likely was a lot of money being withheld while the debt ceiling conversation and that problem was being persistent. And we had a consistent threat of possibly defaulting.
Right.
Now that has been lifted, it seems, and then again, that was also, we saw a little bit on Friday, and then again this morning, where the release of a lot of that capital, plus what normally would come in at the beginning or the first week of a new month from all the 401k and IRA contributions now being released and needing to be placed into the market. I am considering that against the backdrop of the narrative trying to be very convincingly that the Fed is going to at least pause, if not pivot, remains firm. and traders are betting on it. And from what I can tell so far, again, I don't have today's numbers, but last I heard there was about a 30% chance that they'll hike, a 70% chance that they'll pause. So
Yeah,
they're
I mean,
hanging their
well,
hats on that.
the services ISM thing came out today, and it did back off on a lot of numbers. The prices paid is still 56, but it was 59, and the number came in at 50 and change. I would imagine a skip is definitely the way it'll go, unless the CPI number got off the charts. But I mean, it seems to me like it'd be skip, and then by next month, if the number don't break, they probably will do a hike because they're going to go down to Jackson Hole, and so the next time they'll probably have an actual meeting, I think, is in September. Don't know that they're going to go from July to September without making some adjustment if these numbers don't break a little bit further. So they may give you a skip this time, simply because it does seem like there's some moderation, but you know, I think after that in July, unless there's much more moderation, you got a pretty good chance of a hike.
I agree on that basis on what we're seeing via some of the hard inflation,
Yeah, and the
producers,
treasury
which
yields,
is
like I say,
ISM.
they're really going. I mean, anywhere between money markets at 5% and better. But I mean, you can
I
go
get you.
5.5, and A-rated bonds I looked at 6 to 8%. So these kind of rates at some point, like Buffett used to say, interest rates are like gravity. If you don't obviously the interest rates were at zero for a long time, there's no gravity on stock prices,
Right.
and that's how you go from 3,000 to 4,800. But 5% and 7% and 6% and 8%, that sounds like gravity to me. But like I say, I don't step in front of I don't step in front of things as far as large amounts of money. So this is a nice ride for me. I'm very much enjoying it, and
which is great. And I
yeah.
agree with everything. What I wanted to just add is that I understand, what you're saying about, the ISM manufacturing and the other manufacturing data that we have received showing a slight improvement. I agree. Right now, I think the stick in the mud or the stick in the spokes, whatever we want to call it, is employment. And it's extremely robust. It's extremely robust. Many people are going out and they're finding jobs. And that's going to stand in the way of Fed meeting its mandate, which is to corral inflation and get it back down to 2%, which is seeming more and more like in the impossible dream.
Yeah, like I say, not without some kind of contraction, because again, there is just so many people out there with jobs making money, and although every once in a while they'll slow down their spending, that can change pretty quick. I did want to. Can we look at a couple of things that I just wanted to show you and see if I would love to get your opinion here, because I've been doing I've been very excited about this because it's worked out so well. There's two major stocks. There's two major stocks. Yeah, there's two major stocks that made major moves recently, and I really caught pretty good trades on them. One is Lululemon. So can you put Lululemon up there?
Sure.
And I'm going to explain what I saw, because a lot of people are.
You want a daily chart, Jim?
Yeah, do let me see what I'm looking at here. Hold on. I was really looking at the monthly. This is something I'm going to be talking about next week, but I just wanted to throw it out to you to see, what your opinion would be on it, because I value what you say. So if you put the 1 month up there, because this is where I really got the idea from. Okay.
Max.
You can see, Lululemon, the monthly. I'm looking at a monthly graph here. And my indicator.
I know, but if I put up my monthly, it's a monthly max, and I'm going back to 2008.
No, we don't want to do that.
So
I'm saying I want a 1 month graph. I'm sorry, I wouldn't clear. A 1 month graph
on an hourly
on Lululemon. Yeah, I guess that's going to show it too a little bit. It's going to show it, not exactly what I'm looking at, but it's close enough. So I just wanted to show you. I'm going to show something on this and NVIDIA, because both have been fantastic indicators here. Okay. When we came down, obviously we came down to Lululemon, and you've got a report coming out. Remember, they had the earnings report, right? And so the thing is, and this is just for trading, and this is using short-term options, which are a big gamble. So let's get that off the table right away. This is for very speculative money, which obviously is perfectly legal. And we've talked about 0-day, 1-day, 2-day options. We know the volume is exploding in them, and I'm going to show you exactly why. Okay, so here you got Lululemon, and you have it dropping into the 31st, and the RSI goes down to about 20 on my chart. It makes a new low, and the RSI doesn't make a new low. In other words, we don't go to 19, it stays at 20. Now, I like to see a major divergence, which means I would have loved to see that be at 20, and when the new low happened, have the RSI at 27. That's a big divergence, but this is pretty flat. And again, Lululemon is a high-end retailer. So Nordstrom announced that the high-end retailer consumer is still spending. So if you would have just taken a one-day option, okay, and I focused on this for people that were looking at it. There was a 325 call that expired on Friday. You could have bought it on Thursday before the announcement, and you could have picked it up for about 15 bucks. Now your risk is 1,500 bucks, and you would have been 3 points in the money. 325, and the market was at 328. That option the next day, because it had good earnings, and you can see it right on your chart, went to 60. So 15 to 60 in a day. And you had a technical move on why to do it. You had a company that you know is high end, Lululemon. I mean, it costs what, 250 bucks for shorts in there? And so bottom line is you had a little hint from Nordstrom. And so you take a shot. And that's what these one-day options and two-day options are all about. They're about taking a shot. And you're not on margin, so you're not going to get a margin call. You know exactly what your risk is when you place your bet. And because of leverage and limited risk, if the news comes in your way, that gives you an idea. Now, again, you can't stay there forever because this is a trading type thing, right? You can see it didn't hold 386. But for God's sake, if something you bought at 15 goes to 30, 40, or 45, or 50, I mean, you'd be a moron not to do some hedging or some take something off the table, right? Yes. So that's an example of Lululemon. I got another example here of NVIDIA, NVDA.
NVIDIA is the gift that keeps giving, Jim.
Well, you're going to find out on a short-term basis if it gave me to the downside. And I'll show you exactly.
Here we go. Same deal. Here's a monthly chart. It's the hour.
Do a 1 month graph. It'll show you exactly what I'm talking about again. Because this thing, to be honest with you, I'm writing this thing like freaking secretariat right now. You've got a high point there. It looks like about 10 o'clock, coming in at about 395. Yep. And you got an RSI of 87. Now I look at the new high up here, up to 420. And you know what I get? An RSI that says, hold on a second here.
Actually,
I got an RSI when it went up towards the new high down towards 76. So that is giving me a little bit of an indication that I'm getting a weakening RSI after a big high. And that's giving me an indication that a short-term put option might not be a bad play. So if you would have gone out and done like a say a 420 put or a 410 put up there, and I don't have the exact prices in front of me though, you would have been trying to see if there was going to be and you got gaps there. So you've got an RSI that's weakening and you've got gaps there. So again, that's where a guy would take a 1 or 2 day option as a gamble, as he would in Vegas or anything else, but he's got leverage and limited risk. And if he catches a good wave and it went from 420 down to 380, that's a $40 move. I'm sure there's a little bit of juice in there for you. And so there's a trading situation sometimes, in my view, if you can look, and you can do it on all different time frames. You know, you can do it on a 1 year graph, 5 year graph. But if you find high points or low points where you're getting a diversion in RSI, I'm finding that to be very exciting. So that's just next Monday, I'm going to be doing a full seminar on this, and I'm going to have many, many, many examples of what I'm talking about. And like I say, it's obviously
many examples are just running so high right now. So you're right. Yeah. And actually excellent timing, because I think that's one thing
okay, let's look at,
because,
let's look at Apple today. This is why
okay,
I'd be
but while I'm putting up Apple,
I'd be
let
a
me,
person who think Apple might be, actually recently a crescendo here, short term. This is
I
all about
agree.
short-term speculation, short-term
Let me just add
speculation.
one thing, because
Yeah.
because you're already mentioning it, but I wanted to make sure that we're positively 100% clear. When you're saying limited risk, it truly is. If you're buying a call
Or
and
put,
you or a put
right.
at a low price, because you're looking for the move to go in the direction of what you're buying. So a put, you're looking for a downside move, call, you're looking for an upside move. You can only lose what you paid for it. That's it.
Right.
So
No, and
your
that's
risk is
why the
very,
volume
very
is so,
minimal.
that's why the volume is so high on these things, because
Yes,
it is, it is a way of speculating, gambling with a very limited amount of money.
right,
And if you can find a turning point, these options move in value dramatically because you're not fighting a lot of time premium generally.
right, exactly.
And that's the whole reason the volume is exploding on this, because, if you're going to go to Vegas and waste 20 or 30 grand on the tables, or 5 grand or 10 grand on the tables,
Right,
you know,
right. I agree. And
you can
so, and
obviously speculate on this stuff. And I'm not talking out of school in that that's what people are doing.
it is what people are doing. And in fact, it's like if we even took a look at the zero DTE options, which are very popular in the SPX and the ES and the spiders and the Qs, et cetera, et cetera. They're very, very popular. In fact, there were certain times last week that they were representing over 60% of the total options volume.
Right.
So to think that this is not being played is a misnomer. It is being played, and it's being played up and down. Now, of course, you're going to hear about how, retail traders are losing $358 billion or million, whatever the number was, a day. If you're managing your risk, as
Well,
we
that's the
just
whole
said,
thing. On any game of chance, it's managing your bankroll, and obviously, trying to having a methodology that can pick a winner every once in a while. And also, like I say, having some mechanism on how to come out of it as well. Are you going to sell part of your position? Are you going to sell an out of the money position to pay for your original position? There's a lot of different things. That's, of course, next Monday, what I'm going to try to cover. I'm not going to try to cover it 5 minutes here, but the bottom line is, first, you've got to obviously have risk capital. Then you've got to have a methodology to, pick a winner. And then you've got to manage the gains as they come, or even the losses. So there's mechanisms, not mechanisms. There's strategies of doing that. And rolling the position, spreading the position, liquidating part. There's all kinds of things you can do. But like I say, the volume is very heavy on these things for a reason, because people do have a percentage of their money for speculation. And this kind of speculation, if you can find a methodology to find, it's obviously the turning points are when they're best. When you're making new lows and the whole world is selling and shorting, obviously you may have a situation there where, the selling will dry up and it'll bounce. Same thing here. You have the whole world buying AI. You got the whole world today buying Apple. And at some point, obviously, it could hit a crescendo. And obviously, if the buying dries up, you've got a gap on it between 181 and 182. So it's not inconceivable that it could pull back. And some of these short-term options, even with a move of 5 or 10 or 20 bucks, can really move quite a bit.
For Apple to come from 180, almost 185, which it just hit, to drop back down to 182 is $3. It's like, it's nothing. It's going to seem like a lot, and it's going to bring all the indexes down with it because of its weighting, but it's not a big move.
Well, they're buying into future earnings here, because this year's earnings are actually supposed to be down. And the last time revenue and earnings was down for Apple in a year was 2016. And after that year, it came down quite a bit. So there's a lot of optimism.
They're buying into new highs on a hope of women a prayer for 2024.
Well, yeah, they're buying it for 2024 and AR and VR headsets, and that they're going to have some software upgrades on the watch and the iPad and the iPhone and the Mac, and they're going to be dealing more from the
share something with you. I would rather do your strategy that you've just discussed every single day or once a week.
Well, like I
Rather
say,
than
that's what
buy
people are
this
out there
thing
doing.
now, looking
People are
for
out there
earnings
doing
next
day
year.
trading. People are out there doing day trading. So obviously
Yeah,
when
but
you're doing
I'm
day
not
trading,
investing for the long term and having to
yeah,
wait out while Apple decides to correct
right,
back to 160.
right. But
You
the
know,
key is you have to have a mechanism on when the thing might be turning. And I think that the relative strength divergence is not a bad one. And if you think about it common sense wise, it makes a lot of sense because if the relative
see that
strength
RSI
is,
on an hourly.
well, I'm saying I use the 14 RSI and then
Right.
whatever it, in other words, my
Right,
machine.
which is the same, but are you primarily just focused on your hourly chart with that?
No, believe me, it's the circumstances involved. I look at a thing on a 20-year basis, a 5-year basis, a 1-year
Okay.
basis, a 6
Yeah.
month basis. I'll tell you right now, I might find something, and this is the beauty of what I'm talking about. Let me explain another feature, which again, I was going to get into next Monday, but I'll hit it with you quick. If I do a 325 call on Lululemon, correct? And I pay 15 bucks, my break even is 340, 15 plus the 25. Now, if Lululemon is trading 360, 380, and 355, and I like 340 as an entry level, I can actually let it go to exercise and I can actually be long at 340 if I have $34,000 in my account. And then I'm long Lululemon at 340. Same thing on what do you call it? Same thing on Nvidia. If I buy a 420 put and it goes down to 390, and let's say I put, just as an example, I bought it at 10 bucks, I'm short Nvidia at 410. If I want to stay short Nvidia at 410, if it goes into exercise, I have a short position at 410. Not right for everybody because it's a naked short. So obviously you would be unlimited risk. You could try to hedge it by buying a call. But again, if you're an aggressive trader and you're suitable to take that kind of risk, that's how you could turn it into. And if Nvidia is going from 390 back to 360, having a short position established at 410, it wouldn't be bad. So this strategy of short-term options has many features to them. So that's why it's interesting to me because I've been in it a long time. And when I come upon some things that have some interesting features, I like to look into it further. So like I say, without further ado, I'll talk about that next Monday, but I thought it was kind of interesting. You're a little
Very
bit of a
interesting, Jim.
believer on the divergence of RSI, aren't you?
Yeah, oh yeah. And personally, I want to say thank you.
Yeah.
Thank you for including that now, just giving it a little wet your whistle for what
Yeah.
you're going to present next Monday. Because it's great, folks. If you're always thinking about I'm missing out on something and how do I get in? Well,
Or at least have something
options.
explained to you that you can understand and something that may have some merit to you or may not, but you're not going to know anything unless you understand it.
Absolutely. I agree.
Yeah.
But
And
thank
like
you
I
for
say,
bringing that in.
I make it clear all the time, if we're talking about this type of aggressive trading, it is not right for everybody. That's why your brokerage firm and yourself have got to figure out what's right for you. We're not in that business of telling you what's right for you.
Right.
You and your broker are in that business, but we are as
Very good point.
we're information providers on what we see and what our opinions are.
Where are we going next?
Okay, let's go into what the other thing which I really want to hear your opinion on, and I'm going to shut up and let's hear it, is again, S&P, QQQ, and IWM, meaning the big cap S&P, the tech, and the small caps. Let's do an analysis on all three of these things, and let's see if you have any feeling like I do that if 4,800 down to 3,500, Fibonacci returns brings you to a little bit over 4,300. And with a VIX at 14 and a 4,300 here, do you think it might be a situation where the enthusiasm and the complacency is there, the Fibonacci resistance could be there, and that by the end of the week, we could be looking at a market that is totally different than it is right now?
Yes, actually, I would agree with you, but let me try to count this out so that it makes sense to those that are watching us today.
Yeah.
There's a couple of things going on that there's a high potential that the S&P in its little final move up here. And let me start again on my little bit longer term, larger chart to show you that A is representing a primary A wave. And I'm going to go one more out and I can show you the entire decline thus far. So that's the all-time high. In the SPX, it was 48.18. And if that's being the all-time high and it completed on an Elliott basis, a super cycle third wave, what we have started in January of 2022 is a super cycle fourth wave down. And we need to start counting each level down, because from the super cycle, what does that mean on a cycle basis? What am I looking for? A cycle ABC. We're still in cycle A. What's inside that cycle A? An ABB, an ABC of primary degree, of which I've done the A and I'm in the B. So if I'm in a B wave, we need to understand what the characteristics and the personalities are of a B wave. It is performing exactly as it should. In terms of a B wave, Prechter called it a sucker play, a phony, disruptive, deceptive, destructive. And all of those fit. So as we watch, and then if I'm inside this primary B wave, what's going to be inside of it? I come down one more notch. It's going to be an ABC of intermediate degree. Well, okay, what have I done? I've done the A, there's the B, we're in the C wave. Now, granted, we're getting a lot of talk right now, and that's on my weekly. Now I'm going to bring this back down at least to my 4-hour chart. And now we can see that I'm counting out 1, 2, 3, 4, 5. The C wave will consist of 5 waves of minor degree. I've done 1 through 4 complete. I'm inside that 5th wave. Well, now I've got additional Fibonacci relationships that I can start to employ. The first one being is that if I'm looking for a minor 5th wave, what's its comparison? Who's its cousin within this move? It's going to be the minor 1st wave. So I can now put up, well, the first thing I can put up is fibs for the total C wave. We just went over the 618, where wave C would be 0.618 of wave A. And that was at 42.45, and that was last week. It stuck, it didn't go, it stuck, it couldn't get above it. When it finally did, it blasted up and through it. So it just shows you the energy that was waiting there and the shorts it needed to be covered and move. So, but what would be up next for this C wave? Well, yes, this one is here, and that's at 43.04, and it's basically where we've gotten to today. But what comes after that? Because that's just an old SPX market maker level, to be honest with you. It's not a comparison that we have. So what I can quickly put in here is I'm going to go and I'm going to take a look at minor wave 5 when compared to minor wave 1 and see where we're at. So right now they were taken off before, I forgot to put them back on. The 100%, so the equality, that's what's up first. Wave 5 equals wave 1, equality, that was at 42.80. That got taken out, came back, they've retested it, and now going back up from it. So basically, now that we've cleared that, these two really are there, but the one of importance that comes up next is 1.618, and that's at 44.19 or 44.20. So on a minor degree, that's the next target. Does that mean that it can't stop before and turn and be all done? No, it does not mean that. We have to allow for it. So what I got to go next to is I go inside my minute degree, 5 waves, which will complete this minor 5. Within that, I've got 1, 2, 3, 4, and now I'm looking for this completion. Well, look what we got. A first wave, a second wave, and only a third. So really, if I had to make a call here, I'm going to tell people, well, within the minute 5th wave, it's only finished 3 of 5. We're not getting a substantial pullback from these levels, which would be able to stick my hand out and say, yep, that's a 4. This is nothing. So we're still, we're still stuck inside the third of 5. Then we got a 4 and still a 5. Okay, so if I'm going to put in those same fibs where minute 5 is equal to minute 1, that got surpassed at 42, that got surpassed way early. That was 4,200. Now the 1.618,
4,200 was a very big number. Once it got above there, it was all green light at that point.
So but just if we're working on a fib basis, we go, it's like it broke, and
Yeah.
it broke substantially. What's my next level? The next level was 42.75. That broke, not excessively yet, but it broke, and it broke successfully. So what do we got after that? We have to go on this minute degree. We go way up to, okay, wait a minute. Let me get in there. I got to fix that real quick. I can do that real quick because I don't.
And
know
I
that
have a
one.
question for you because this came up on my research.
Yes, sir. I'm listening.
Hang on. Did you finish your thought on what you were doing?
I'm quickly just putting in the last two that I can associate with this type of a move. And so that we can see what is the potential. Now, people say, boy, that's really high. It's like, you're right, it is. Okay, so here's my next one, 2.618. And again, I'm comparing minute 5 to minute 1. So my first, most common, 100%. Next is 0.618, blew that out the door, so don't even look at it. Next after that is 1.618. When that breaks, which it basically has, it can come back and dip below it, which would be fine. Doesn't mean that it could mean that it's over. I don't know yet. But my first take is going to be that if that's just going to be a 4, we got a 5, and that raises the potential. We get to 43.80. That's the next level. So I'm approaching this pure technical. That's what Fibonacci is. That's what Elliott is. They're technical. It has nothing to do with the fundamentals. It is pure technical. And again, when I'm looking on the outside, what else do I got up in here? Well, 1.618 from minor 5 being 1.618 minor 1 sits up here at 44.21. So I'm building a zone. I'm building a resistant zone, a cluster of resistance that is very likely the next level that the S&P would have to challenge to get through. Now, bear in mind, I got to back out again. I'm going to go to my daily. There is nothing. I got to go one further out. Bear with me. If I'm looking at this whole thing, one of the things that a B wave can do and would be not out of the realm of reality here is that, and I laid this out back in October after we made this low and was looking at what primary B wave could do. A primary B wave can come in as an irregular. And now I want to show you, because there's one more grouping that I can put together, and that's going to be for the B wave itself. Right? So we've now kind of gone past the 618 level. That was just about 4,300, or actually we haven't hit it. We're getting ready to. I got too many lines. We're getting ready to it. It sits at 43.13. That is where, basis the SPX, this rally will have retraced 62% of the decline from the all-time high. Now, what does that leave open after that? We go to 100%, and that's going to be 48.18, which is the high. But if it turns into an irregular, where the B wave goes up and creates a new high all on its own against, a larger count, it's very possible. Then we're looking at 236 to 1382, and we're looking at above 5,000. So when you hear people talking about 5,000, technically, yes, the potential is there. I cannot say definitively, absolutely not. I'm not bringing in any fundamentals. I'm not bringing in anything that's just hanging over the market right now. I'm discussing pure technical. If you want to add fundamentals, which if you do, Jim, I'd be more than glad to have that conversation. There are too many things that scream this shouldn't be going on.
Well, I tell you one thing, a lot of the RSIs on the longer term are right around 60. And we know that the RSI, if it gets through 60, can go into an acceleration phase. So anything that you do, you have to respect the fact that there could be a melt up. So that's why you wouldn't do anything. You wouldn't do anything on the sell side that would have any kind of unlimited risk, or you wouldn't do anything like wholeheartedly get out of everything or anything silly like that. But you would maybe look for things that might give you an opportunity. And I'm going through some of the stocks like Adobe and Advanced Micro Devices. And I am getting a divergence. Like I'll give another example of AMD. It hit a high point on Friday with the RSI at 85. And then it made a new high to 130 and the RSI was 78. And now it's trading where? 118. So, I mean, that's my deal. I mean, that's my belief system.
Show your
I
point,
believe
folks.
when these
I'm just-
RSIs diverge, there's value there. So I'm gonna act accordingly.
This is not just on a 4-hour chart. I can put it down an hourly chart because I want to just show what you're talking about. Here's the hourly chart. Here's the thing hitting 131
Yeah, and look where it was when it
on
hit
a
a high of,
on a declining RSI.
yeah, when it hit a high of
So
127.
that's the point Jim
Yeah.
is making.
Yeah.
Now,
That's-
yes, you got to spend the time. Yes, you got to watch it. Yes, you have to be able to react.
Well, they're doing that already if they're day trading, right?
Well, yeah.
Yeah.
But I'm just putting in a point to defend. It's like you can't ignore it. You have to spend the time and look. If you come in late, you might not be happy.
Yeah, and
So if
also,
you're gonna
people that
play
are
it-
long, listen, the other thing, people that are long the stock and has had that kind of run, you would imagine they'd have their antenna up on when things might slow down a bit. A lot of these stocks on
Right.
the AI have big gaps underneath them. Gaps get filled at some point. And again, writing calls against your stock when it's, high and the implied volatility is high, that means you're going to get a high price on the call at a high strike price. And that, in my view, is the better time to start looking at it and even collaring the position. So, I mean, anything you bought, I mean, some of these things like AMD, the darn thing was at what, $90 and it went up to 130. Somebody's got a big hit going on
What
there.
important is it's like the earnings.
I want to
they didn't
protect it
like.
a little bit. Yeah.
They didn't like the earnings. This is the AI rally.
Well, of course it is. That's why I'm trying to
So,
say.
this is a company that didn't like the report, the earnings report. They dropped the stock. And then Nvidia, well, AMD, Nvidia, chip, okay, run. And so it even makes it even more attractive to do the trade you're talking about right now.
Yeah. I mean, I'm looking across the board. All of these AI stocks that I'm looking at, have done exactly what I said about the other one. I'm looking at Micron Technology. It had a run up. The RSI was 79. It had a retest of the high. The RSI was 69. Where's the stock now? It's not at 75. It's at 68. So, I'm not just throwing it against the wall, hoping it sticks. There's some value here, I think.
Absolutely. And again, I'll support you on no, you're not throwing spaghetti at the wall, seeing what sticks. This is like proven. In fact, when they hit the high, if you would have went and looked, yep, it reacted, but it didn't exceed.
Yeah, you can exactly. You can see the divergence right there in front of you. And that,
Right.
That's a pretty reasonable drop, 75 down to 68 in 2 days. What would a two, what would a two, like, again, this is for speculating on short-term positions, which people do all the time. So this is speculative and not for everybody, but for gosh sakes, if you did a 1 or 2 day option, which is what people are doing out there, but you can find a good turning point, that's when it has value. And then that's when it goes from just crazy gambling to possibly speculative activity.
Right. Right.
But
It's
yeah, I mean,
pretty
that's why,
wild.
yeah.
It's almost as wild as the interest rate market, treasuries.
Yeah.
Just to add, because I know you had started discussing treasuries earlier, the 13-week T-bill and the 26-week T-bill both came out at 5 1/4.
Yeah.
And the investment rate was even higher. In the 13-week, it was 5 3/8, and in the 26-week, it was 5 1/2. Now,
one thing I was thinking also is, Buffett, talks about how I don't know anything about everything, but I have a pretty good idea of consumer behavior. That's why he's an Apple. Okay. He doesn't know much about this and that. He knows he knows the consumer's in love with this thing. So the Federal Reserve, in my view, also is very well aware of consumer behavior. And between 2008 during that crash and about 2021, because we had another crash, these guys had interest rates at 0 for a reason. And it was because they were trying to scream in your ear, get out of the money market, buy something with your money, buy some stock, buy some real estate, get the heck out of money market. It was very loud. Not everybody heard it, but that's what they were screaming. I think with money market at 5%, they're screaming the direct opposite. I think
Out
they're
of
screaming,
stocks
put
to
your
put
money
it
in the
back in
bank.
money market.
I think they're saying, put your money in the bank. Don't speculate on stocks. Don't speculate on real estate. Don't do anything except put your money in the bank. That's why I got this rate at 5%, you guys. So I'm viewing it.
Let me back that up with just some thoughts that are kind of going on here.
Yeah.
Right now we're discussing, okay, we've got the debt ceiling done, taken care of. We didn't default. Whoo, what a relief.
No, but not a one person with that's drinking hot coffee and is straight in the mind thought we were going to default.
I'll tell you what, though, but
because
I think
Marjorie Green and that
a
crowd
very
is a
bad
very
thing to
small
go
amount.
on.
Do you know what I mean?
Because the reality is, if they really got sticky, and we did, everybody would have been caught by surprise. So I think that I don't disagree with your statement.
Yeah.
I disagree with the fact that there was too much complacency and belief that it wasn't ever going to happen.
But that's just
because
our lack of information,
they
our lack of
money.
information on what they're really saying behind closed doors. Because people say anything in a microphone with a camera on them, and then you bring them behind closed doors and you explain the seriousness of it. So you got to separate, the on TV baloney to the reality. And there was just no way we're going to default on our debt.
Which is fine. But we're now just going to come back into what's going to happen now.
Yeah.
That I think that what people really need to focus on now is the Fed is continuing to tell you, get into the money markets. And the reason
I hear it very loud and clear. I'm not deaf. I might have been deaf in those
I know you are. Let me finish here
for
just a moment. Let me just finish.
Yeah.
It goes directly in line with what you're talking about. Is like if we're thinking that the money markets that are in good shape right now, that you're getting a straight 5%, 5.25%. And your term is going to be shorter. The Fed and the Treasury Department are getting ready to launch into $1.2 trillion worth of auctions that have been delayed while we went through this whole process of trying to raise the debt ceiling.
Right.
So when that happens, folks, and it is going to happen, there will be a liquidity drain out of the equity markets.
Yeah, in other words, Michael, what you're saying, who's going to buy all that stuff? Well, how about those people that are in the stock market that have jumped up from 3,500 to 4,300? Do you think they have some money to buy some T-bills if they dumped? So there's your natural buyer.
Well, yeah, but I'm just saying that what the market is like watching, giving all their money, and then what happens is it gets put back into the market.
Yeah.
Only to have it drained out of the market, which will cause, it's going to cause a reaction. There's going to be some downside here in the market, and there's a lot of stuff that can happen. And then the inflation numbers, the way that they're kind of being presented, so many things I believe fit to what is happening in terms of what I see in the interest rate sector. Now, here in the bond market, this is the 30-year bond, and I'm just going to go over and show what I see even just over the near term. I'm going to be looking at, here's the yield. So up to my weekly chart, I don't need to even go that far. I'm just going to go to my daily chart, and I'm going to put this on the line, which is on a closing basis. Right now, the yield on the 30-year bond, it's very stubbornly sitting at 3.97, but intraday, I've watched it drop down to 3.87, almost 3.82. And those are these levels in here that are being represented by Fibonacci decline. Off of the high that we got back in October, I'm seeing an A, B, C, D, E. So what I can sort of say right now, why we're going through this period about what the heck is going to happen, is the Fed going to tighten, is the Fed going to pause, et cetera, how's that going to affect our bond market? You can see that even in the 30-year bond, in the futures market, is it really picking up on volatility. In fact, today it was below 127. Now they're going to buy it back. Why? Well, because that's the way the market is trading, and people are now positioning themselves. Again, we're going to pause. Again, that we're not going to raise interest rates. So, it kind of pushes out a false narrative. But here's what I believe. It can come down. But if this is a triangle, what happens after in a triangle is it thrusts up and out, because remember the E wave would be down here. It's going to thrust up and out of that triangle. Guess where its first stop is going to be? 4%. And then you're going to have 4.4 and 3/4, or no, excuse me, 4.34. Next up would be 4.81, and next up with that 5.5. Now, when? Well, I'm expecting into next year. So what we're dealing with, I think, is a pretty serious situation in terms of interest rates. And they're trying to balance that out by listening to too many pundits and too many people pontificating about what the Fed has to do. Now, if we look at things realistically, the Fed and its governors, it's very split. But I think that the hawks are a little bit outnumbering the doves. So they may pause this month, because that's kind of being represented by Fed fund traders, giving a 70% chance that they're going to pause versus a 30% chance that they're going to hike. But when we get the unemployment numbers, which we did, they show that's inflationary. Granted, great.
Like I say, whether they do a quarter or not, or don't do a quarter, I think the bigger thing is how are these markets going to be reacting? We only have 15 minutes left. I'd like to hit the gold, the oil, and the dollar if we can. So let's go fast over here. GCM, and I'll just give you my view on it. On my 20-year graph, I've got 3 highs coming in right around 2075. And the RSI, the first time we ran up, which was in July of 2020, RSI was at 83. The next time we ran up was March of 2022, RSI was at 60. We just recently ran up there and the RSI went to 61. So one of my concerns about gold is that it does seem like on a longer term basis that its RSI is shrinking during these rallies. And that's why I said, at 1800, buy it, and when it got to 2050, get out of it. And if it gets above 2050 and 2100, then basically you got to come back in. But other than that, and again, it is holding 1950, which I think is important. So basically that's how I've been viewing the gold. What do you see?
I see that. I agree with you. It is holding 1950 very cleanly. It dipped below, came back, went below, came back. I'm allowing for it to drop to 1916. And that would be the level that I think has to hold. And I believe what we're seeing is just a 1-2, 1-2 on an Elliott basis. So the next logical move would be that we drop into a larger third wave. First to start in this smaller, but we start pumping, we start going very quickly. And each time it started to get started and we broke back above 2000, they get caught up and they drop it back down. And we've seen that now a couple of times.
Yeah,
I think it will, excuse me, catch fire. And what's going to wrap itself around is, again, the dollar. The one thing gold does not like is a higher dollar. It will soar if the dollar is debasing itself, basically.
And I don't think it likes those yields on A-rated paper and treasuries being so high. I don't think it particularly cares for that either.
Nope. They don't, because they'd like to see it all come down to give it more value. So again, so what we're seeing, the correlation, at least on a day-to-day basis here, gold is they're watching that dollar index and they're seeing what's happening there. As like gold right now is up 630, but you see the downticks. They will start to downtick it because it's turned green. So I still truly believe in gold as a long-term hold, and I mean long-term. I'm not talking a
permanent part of
so.
your fixed portfolio type thing.
Right. I'm talking about extremely long-term. It is the core of a portfolio because it's pure protection against whatever else could happen.
Yeah.
So I still favor that. I still do feel very cleanly that this is the areas we're going to be going.
Yeah. And like I say, I'll be more than
too.
happy to jump on the train when it breaks 2050, 2100, because as you can see, once it does that, there's plenty of room on the upside. But until then,
Absolutely.
you might be
So,
holding
yes.
on. You might be holding on to,
But
a
remember
little bit of a
that
bomb.
I agree. But remember, in those types of situations, mindset's going to be really important. So you can't be going like, oh my God, I'm paying $2,000 for a troy ounce of gold. Oh my God, that's so expensive. If you're buying it because it's with your belief that it's like it's going to go to 22 or it's going to go to 23, and actually when it does begin and it starts to break, I think then it goes straight line initially. Now,
Yeah.
the other
Like
one
I
you
say,
wanted
you've
was
been
the
in it.
dollar.
Me and you've been in it a long time. We probably were in there when it started at 200. So to say it's a store of value, if you would have bought it decades ago at $200 and now it's at 2,000, that's 10 times on your money. I don't think that's such a terrible thing to have. The
No.
thing here is we're not at 200 anymore. We're at 2,000. And if the Fed wants to cause a little bit of disinflation, and if there's going to be, like Prechter and other guys say, a little bit more of a deflationary thing, it could be problematic for gold. But most people, like I say, like to have a percentage of it here just in case, this paper currency thing ends badly.
Right. Yeah. Well, yeah. There you have it, Jim.
Let's go over to
Which
the
is
crude
something
and see
else.
what you say on the crude real quick.
Crude, I see OPEC playing games. Even if I jump up here to the daily chart, it's been in such a down cycle here for a little bit since it reached its highs in June of 2022. So it's actually been declining for 2 years. Now, was that enough? Many people are thinking it was. Many people are thinking that it was. So I'm thinking that, the bounce off of that low meant something, but I don't like this, but I see this. And so this remains kind of corrective, and we likely maybe have another line down. Now that would be helpful, but it's a kind of a really crude's also a squirrely type of a picture. If I look at my weekly, came down and equaled it, and it could have been enough. Could have been enough. And if that's the case, it really needs to move and go.
Yeah, I
Not
mean, to be
hang out.
honest with you, I have traded in and out of that a little bit, and at 83, 87, that's where it can't get through, and 65 is where it can't get through, and
Right.
those two numbers have been pretty good to work with, and a lot of people have been predicting these energy shares are going to go through the roof, and they had a great 2 years. They were the best performing sector in 21 and 22. In 23, they're the worst performing sector. So I don't know if that's telling you something. And they just announced this big cut, and all of a sudden it's right back in the toilet a little bit. I mean, you're up a little bit here, 82 cents, but the darn thing was at 75 overnight.
Then they come out and say, oh, by the way, we're cutting. Right.
Yeah.
So yes, I actually, that strategy you just mentioned, I think is a another valuable one. But again, you got to kind of follow somebody that knows how to do it. And that would be it's in a box between 65
No,
and
exactly.
80.
And all you need is patience to wait for each side of the box a little bit, as long as the box holds. And when it doesn't hold, then that's over.
There's many different ways to put that on, and I'm going to leave that up to you, Jim.
Yeah. Well, I
Yeah.
mean, people need to have an explanation on this and that. But
Right.
again, this is another thing. Again, if you look at the graph on it, it's spiked up, and then, it couldn't hold its water again, because some of these longer term graphs are starting to become problematic. Right now, a big number for me is around 80. So I'd love to see it. If you want to be bullish, get it above the high for last month, June, which is 75.
Well, the SMA is sitting right at 80, so I'm gonna call that resistance.
Yeah, no, there's no doubt. That's what I'm saying. You have to trade. In other words, sometimes it's better to buy something higher than when it's currently trading, because you'll have momentum and a crowd behind you.
Right. Let's finish up with the dollar here.
Yeah, let's do that.
The dollar is incredibly interesting, folks. It truly is in my book. I'm continuing to look. I'm leaving open the potential that we actually, and we keep getting up there, we keep going back above 104, that we may come all the way back up to that high that we saw back in March, and then it would do nothing more than just do an A, B, C flat. So it's still corrective in terms of the little bit larger picture, where I'm looking for here's intermediate degree A. So there's A of B, B of B, and we run into a C wave. And that C wave, I promise you, will likely be extremely destructive and get us down below 100, or as we say, par, pretty quickly.
Yeah. Like I say, if you do break,
These are my
you
lower
break under
levels.
100, Michael, you're 100%. You break under 100, you're gonna be looking at 98 or 96 pretty fast.
Here you
And,
go.
that
98,
106 is real.
97,
Like I said, the
96,
106.
94.
Yeah, you see
I'll tell you
106
what you're
as,
going to look for real quick. You're looking for 91 real quick.
yeah. What about 106 though? You get above 106, you got to change your math around.
I would have to change the math around. You're absolutely correct,
Yeah.
because then it's breaking above 105.888. Changes it. But in essence, Jim, even I can leave it as a B wave, and it just brings us up to 107, 107, almost 108.
Yeah.
So again, I don't necessarily have to change the larger picture. It changes the very near-term picture. But again, there has to be a catalyst that's going to drive people to go buy dollars.
Well, the catalyst would be Fed funds goes. The catalyst will be Fed funds goes to 6%.
There you go. Whatever it's going to take,
Yeah.
brother. I'm telling you. But they're not. Sorry. Thank you for making me laugh, because you're right. That would be a very strong catalyst.
Yeah.
I'm getting out of these. I'm going to go buy the dollar, and I'm going to give it to you guys because you're going to give me 6%.
Because real estate's starting to come on. The real estate's starting to go again. I mean, I'm in Las Vegas, and the properties are starting to go nutty again. So the bottom line is that whatever they've done up to this point, has not exactly killed the economy, and it hasn't exactly killed consumer spending, and it hasn't it hasn't killed real estate either.
Right. There's still a tremendous amount of money in the markets, folks. There's still a tremendous amount.
Oh, someone asked about natural
billions.
gas.
Natural gas? Yeah. What do you think of that?
Take a look at that.
Yep.
Well, gas normally will bottom in December. Why is it choosing to bottom again in June is beyond me, but this is a daily. And I was taking it off of this low, which obviously had to be via a different month, like either the June contract or the May contract, or, or maybe even the March contract, since it was February. So this is basis the July contract here, and it might just be pulling into a secondary low. We got a little bit of an uptick on the RSI. So again, just kind of keeping an eye on that. It didn't get down to 30, and that would be where you'd want it to really give you a clean signal to step back in as a buyer. No, I just tell you, this is a 1, 2, 3, 4, and then we're working on a 5 down. So I'm going to say that it's getting very close to reaching another bottom. And then we start to rally again. But there's so many seasonal factors, and there's so many additional factors within natural gas to really say what's behind each move.
Well, one last thing on this is Joe Manchin got something into that
he did.
Debt ceiling thing that had to do with natural gas pipelines. So that might be why you'd bet on it.
Yeah. Okay. Good. Yes. And I remember reading about that, but I didn't read details. So you're right. There you go.
Yeah. All right. Top of the hour. It's time to tell everybody how to get a hold of us. And if they have any questions that they would take more time on, because we can't get to everything right now, we could always speak to them individually. How can people get a hold of you, Michael?
You can get a hold of me by sending me an email, and that address is michael@mjf1partners.com. I always answer all questions or requests, and so I welcome them. You also can get a hold of me through YouTube if you are going to Traders Helping Traders, and that's the name. And then also just search for my name as well under Traders Helping Traders. We did have somebody hack the name and they're using it. That you then can leave me a comment, and it could be the form of a question, and I'll get back to you on that way as well.
Okay, perfect. And as far as Option Professor is concerned, we are going to have a meeting next Monday where we're going to discuss the short-term trading on the options and exactly some of the different ways of timing that and going over some things about hedging, meaning protecting your portfolios against market declines or upside surprises. You know, if they caught you out of this whole market move, you could have hedged against this upside surprise by doing some call activity. So we will discuss many different things on Monday, be very action-packed. So go to optionprofessor.com and we'll make sure you get the link. OPTION, professor, PROFESSOR.com. Hey, it's great to have everybody here. It's going to be a very exciting time, I think, because we are having a lot of markets hit into certain areas. And will the AI boom continue, or are we at an inflection point? There's a lot of big questions are going to be answered. I'll see you next Monday, everybody. Thank you, Michael. And I'm sending it back
You're welcome.
to David.
Thank you.
You betcha.
All right, thanks, guys. Great discussion. So one thing I need to announce real fast. Our friends over at tradersontrend.com are having a big event this week. It's live right now and will be going on every day this week until Thursday or through Thursday. So today, Tuesday, Wednesday, and Thursday, big event. A lot of our friends who appear regularly here on Timing Research are doing presentations there as well this week. So be sure to check that out. Again, tradersontrend.com, and you can find more information there. Just want to remind everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Also now on Substack, if you use that. Or you can just go to TimingResearch.com and get access to this one as soon as I can get it posted, or any of the past shows and events. So I just want to thank my guests again for today. Michael Filighera of LogicalSignals.com and TradersHelpingTraders.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.